Hi guys, Harry Yotis here, professional trader for 20 years. Been trading this market starting in 2005 and still alive in 2026. Well, today, the last day, this candle right here of the chart of the S&P 500, the last day of the first week of March the 6th, 2026. Crazy day. It's all about the war. The big story today is that protracted war fears are putting a lot of pressure on this market. Remember, guys, when we had this big spike here on Wednesday, I said that we need 2 days of up days before we are convinced that we are on our way up. We didn't get it yesterday. And yesterday I said I reserve my judgment. I'm still waiting to see what happens. We still need 2 more days. And today we confirmed it. Okay, we confirmed that it wasn't bullish. And I still think we need a couple more days of up days before something turns the tables into the bullish side, okay? A lot of fear out there, okay? But first, let's get to the technical picture. Technical picture is still fairly neutral. We're still within this huge consolidation pattern. Even down here would be neutral if we're all the way down for like 652. We're stuck in this huge consolidation pattern. Everything keeps hitting this market negatively, and eventually it's going to crack if you keep having a lot of negative news. But still, the underlying fundamentals are fairly strong. We'll get to we get to the non-farm payrolls soon, which wasn't that strong. But first, we're going to talk about this technical picture, which is still neutral. We're still in neutral territory. We're going to reserve our bullishness until we get up to new highs. Okay, that's it. After that, everything else here is just chop zone 3000, okay? Or chop zone 2000, whatever you want to say. So let's get to the sentiment. Okay, today, I thought we were going to get into fear, but the market showed some strength and we're right on the border of fear and extreme fear. I thought we were going to get to, extreme fear, and we're right on the border. Everything is at extreme fear. The strength and the breadth has dropped from extreme greed to greed, and everything else has just dropped into extreme fear, okay? You can see here on the VIX, we penetrated the highs here. We closed at 29, almost 30 VIX, okay? I suspect that in a couple of weeks, like the VIX drops, okay? It dropped because we're really at the highs, unless we get one of these taper tantrums that we had here, the tariff tantrum of Trump. I suspect that a lot of stuff is happening that is bad with this war. Trump might sound a little bit conciliatory over the weekend, maybe. Who knows? But so far, the fear of this market, when you have the Straits of Hormuz possibly closing, oil spiking, and the rhetoric is really, really like hardcore. We might get even a higher move. Okay, which is what I was hoping for. I hope we got an undercut. Okay, we have an undercut to get to this extreme fear level, and that could be a lot. We could actually go down, touch this support. When we get to that extreme fear for a while and it gets solidified, and then I see some kind of signs of more negative news not affecting the market, that's when I'll add more to my longs, okay? At this point, we just wait. We're in this consolidation zone and we wait. We have the sentiment that is getting there, but not quite there. Guys, we're just 3.5% off the highs. It's not a lot. We could even drop to here and drop 6% off the highs? 7%? That's normal in a bull market, okay? But everybody's acting like the sky is falling. It could, who knows? Nuclear war is the sky falling, literally. But so far, this market is still resilient, stuck in sideways mode, okay? We did have one macro print today, non-farm payrolls, okay? They came in at minus 92,000. We were expecting 55,000. We got minus 92. That's bad. Okay, so we had that before. Bad news, minus 140,000 in October 2025. Minus 70,000 in August, but then we start to rebound up higher, okay? And these are the revised figures. Like in December, it was positive, slightly positive, and now it's been revised down to minus 17,000. But this is real. 126,000 jobs were created in January 2026. I think it was from 130 or something. It was revised. Anyways, so we're at this level where we are seeing negative job prints. So this is bad for the economy, although we don't see it on initial claims. So we've had a piece of news here that said that because it was very, very cold, 250,000 jobs were not created. Like people weren't looking for jobs to the tune of 250,000. Who knows? That would have made it positive. But this is just speculation. From now, the jobs number is bad. It's falling down, and we'll see. This is good, though, for falling rates, okay? So the Fed now has to decide. Do we want to save jobs or do we want to save inflation? Because the oil going up is very, very inflationary, okay? So the macro print, not good. The technicals are neutral, and the fear and greed index is almost at extreme fear, okay? Which is like contrarian, but not exactly. I like to go to the extremes before making a move. So that's what we have for today in terms of the technicals and the sentiment. Let's get to the protracted war fears, okay? This is what everybody wants to hear about. What's going to happen? Okay, I think, like mentioned before, we continue to go lower unless Trump says something conciliatory over the weekend. I don't know if he will. He probably will talk tougher, but we could get to these levels here on the SPY, which is great. We wanted that. We want to get to the extreme fear so we can start adding, because I don't think this market tanks. I don't think we're going to have like a World War III scenario. If we do, we don't even have to worry about trading, guys. It's over. But so far, I think these markets are sort of holding up better than I expected. I mean, given what's happening, I would see this market falling apart. It's not. It's holding up. Okay, so this is good. However, we have oil. Okay, oil is the key thing here that is spiking higher. Look at $91 a barrel. I think oil is up in 1 week. It's up from 65 to 90, 40%. About a 40% move in like a week. This is huge. This is like, like Gulf War era type stuff, which is, it's justified, I guess. So this is like parabolic. Very rare to see these parabolic moves. Even here, they were going up slowly before the parabolic move, but now the parabola is coming immediately. Okay, I mean, it's up 15% today. Stay away from it. Okay, if it does, if we get some conciliatory move, you're going to see a big crack in the price. Okay, USO, if you want to trade this, that's US oil, but the USO is trading at like a 109 right now. It's a similar pattern. A breakout is very, very bullish. So we have to stay out of it. Yeah, I was wrong on my oil short. I took a hit, but that's the way it goes. However, we have gold showing some kind of bit. I'm surprised. Honestly, I'm surprised that gold is this low. I suspect there's going to be some catch-up move. I expect it to be 10% higher. Okay, this is what I'm looking for going forward. And we have a lot of delivery notices for gold that we mentioned in my X page. Let's see more events here. Here are the, this is just a positioning. Okay, COMEX gold delivery intentions. Okay, another 666 contracts, which is 66,600 ounces asked for delivery. This is a lot. 4,800 or 4,800 contracts being asked is a lot for the gold. Okay, silver is the same story. I was surprised to see silver this muted. I thought it would be even much higher than this. So we could get that going forward. We could get some kind of explosive movement in the commodities going forward, because I don't see, it's very strange to see the commodities down with oil up on war fears, okay? Because the other strange thing is, like, you see dollars muted, the dollar, this is the Dixie, okay? It's muted, it's not even going higher, it's like almost stuck here, okay? So like the dollar's not confirming, like, people are not diving into the dollar. The only thing they're diving in is oil. Like, everything else is muted. So it's very, very strange to see this in a war scenario. You would expect the dollar to spike even higher. You expect commodities to spike even higher. But this is the only security, the only asset that is ripping. It's very, very strange to see. Usually you would see commodities go. So we have to look at how this resolves, because all the other commodities, like, you're going to have a delay in gold, or this gets faded very quickly, okay? Which goes to show that every market is slightly different. Like, there's nothing 100% certain in trading, okay? So keep an eye on oil. If Trump says something conciliatory over the weekend, he doesn't have to like completely abandon the war. It just says we're open to negotiations or whatever. Boom, it's going to tank, okay? And I don't think gold or silver tank in that case, because I think gold and silver are going up for other reasons as well. And I see no war premium here. Very, very strange, okay? So, and to me, the dollar, Dixie, is pretty much staying around these levels, not going up with oil. Very, very strange to see. Okay, so in the final section, I'd like to talk about a stock that I'm following and I am long on. It's United States Antimony Corporation, UAMY. Okay, these are the levels that I'm looking for. The $12 level is the previous high here, And of course, the low level is $4. So it's huge, okay? There's a huge gap between the two. The reason why is after this big spike, I was waiting to get into it, and I got into it here, and I'm still holding because I got assigned at 750 around here. I'm happy to hold it. This shows extreme strength. You have a bottom here, a top, and this is a higher low. So we have a higher low scenario working for United States Antimony Corporation, and I'm looking for it to get above 12. That would confirm the higher low and into a higher high scenario. Then it would be bullish. Once we get above the $12, we're going to the highs of 19. This is what I'm thinking. Okay, antimony, fundamentally speaking, is a very fundamentally sound metal right now, especially for the military-industrial complex. It is very, very expensive, tens of thousands of dollars a pound, if you will, or is it per ounce? I'm not quite sure of that. But it's very, very expensive. It's very difficult to find the price because you have to go into the OTC market, but it's very, very sought after in munitions and military, okay? And I think this is why it's catching a bit. It came off today, but I think so far this is bullish. If we get above the $12 here, it'll confirm the higher low scenario and probably explode it high because it's nothing but air after that, okay? The high would be 19. So that's what I'm looking for United States Antimony. It has a fundamentally strong background to it, and I'm expecting it to break eventually the $12 and go to new highs. Okay, so that's it, guys. If you like what you hear, just like and subscribe, and of course leave a comment below and I will answer it as fast as I can. So let's reiterate here. SPY, we are technically still neutral, even though it broke this level here. It's not enough of a break. It could easily recapture. Okay, so we are neutral when it comes to the technicals. I am bullish, but I'm waiting to add until we get to extreme fear, which leads me to think that we go even lower. We can have a gap. Monday, I'm expecting, all things being equal, we get a gap down open that is bought. Okay, it doesn't have to be bought, but if we have a gap down open that is bought, that will confirm that we are close to a low. But that would happen only if the war fears are alleviated, I think. Okay, so we have the sentiment close to extreme fear. We had non-farm payrolls, very bad, 92,000 job losses, but it adds to the rate cuts scenario, okay? So it really didn't affect the market that much. I think this is all because of the war, okay? And the war fears, we have oil is the only really the only commodity that is spiking here. This is a huge move. A 35-40% move in a week is huge, okay? It might get faded. This is very vulnerable to being faded. Of course, if the war continues, this could spike even higher. You don't know. But I'm saying this is very, very stretched. What's the RSI? Look, extreme levels in the RSI. Okay. Extreme levels. Look how high that RSI spike. It's at 85. I've never seen that high. Okay. I guess it could go higher. Who knows? But these are parabolic moves. Very difficult. Okay. Very difficult. Trying to short a parabola, very, very difficult. But I think that might be the correct move going forward. Okay. But gold, not really following those kind of spiky moves. Okay, it's basically up today, but down overall in this week, where oil spiked. Silver is the same thing. Silver down this week with the war. Okay, you would expect commodities to be an even more rare supply and ripping. Okay, and of course the dollar muted, which goes to show that I don't think this move might be longer lasting. I don't know. That's just a hope. And not really grounded in anything solid. I just don't see every other commodity, even dollar, which should be spiking. The safe haven assets should be spiking. This isn't a spike, just a little oversold bounce. Okay, like a bear trap oversold bounce. It wouldn't even go above the 100 level. Okay, which is very, very suspect to me when I see every other commodity and the dollar not going up. In war and just oil. Okay? And finally, UIME. United States Antimony. I like this company. I'm waiting for that lower high scenario to play out only if it breaks above the 12. Okay, very, very strong fundamentally, and I like the technical picture as well. So that's it, guys. Let's see tomorrow or over the weekend what happens with this war. It's going to be a very, very crazy March. All right, see you guys later.